Hey guys, this is Mr. Oxy coming at you live from West Palm Beach in Florida. It is February the 2nd. It is late afternoon. The markets are closed. Occidental went up a little bit today, and I'm sure the majority of you are happy about that. And what we are going to do in this video is discuss Occidental Petroleum, but specifically the clash of the titans. So stick with me and I'll walk you through it.
This is what you came for. This is what you came for. I'm over. This is what you came for. I'm on. This is me.
Guys, the clash of the titans is Warren Buffett against Carl Icahn, and very specifically as it relates to Occidental Petroleum. I thought I would take a little bit of time, and probably as most of you know by now, I don't have a life, so I thought I'd look at some of the SEC filings and see what these two giants of the investment industry have been up to, respectively, and very specifically how it relates to their positions in Occidental Petroleum. So, first, let's start off with a little quote. You are not born a winner. You are not born a loser. You are born a chooser. I'm not sure who said that, otherwise, I'd give them credit. But anyway, that's something for us to think about, right? Very importantly, I'm not picking on anyone here. I'm not even picking sides. Um, I take no personal joy or happiness from someone losing money on the markets. Um, and I actually enjoy people sharing that they have made some gains. So that's just my trading philosophy. But what we're going to do first is look at Uncle Warren Buffett. So last year, you would have known, probably if you were just generally following the news anyway, that Warren Buffett's Berkshire Hathaway had swung to a huge loss after the coronavirus pummeled these stock investments. Now, for years, I have been a follower of Warren Buffett, but over the last year or so, some of the luster has kind of rubbed off that glowing history that he had built. And what particularly confused me was not really Occidental Petroleum, but the fact that he got into, for example, all the airlines early in 2020, and all the things that Warren Buffett generally looks for in terms of making an investment. A good performing company, a needed service, in other words, something that anyone can buy, easy to understand, a wide moat, strong balance sheet, all that kind of stuff must have been factors that were in play when he invested in Southwest Airlines, Delta, American Airlines, United, etc., only for him to exit those positions a few months later. And take huge losses in the process. And then, of course, many of them rebounded and actually, I wouldn't say they recovered because obviously the coronavirus still impacts airline tickets even today, 1 year later. But many of them recovered and actually made a bit of money for their stockholders anyway, especially for the people who didn't just exit the positions at the lowest or at the low point. So let's take a look specifically at Occidental. Most of you would know that in August 2019, Berkshire Hathaway invested $10 billion in Occidental. The reason why the Occidentals are all highlighted in yellow is because this is an SEC 10Q for Berkshire Hathaway. And because I search for Occidental, it comes up in yellow highlights. So a couple of things are interesting here. Warren Buffett or Berkshire Hathaway invested $10 billion. That accrues dividends of about 8% per annum, not about, but exactly 8% per annum. And then over here, you can see, I'm not sure if you can read this because it's a little bit small, but the preferreds are redeemable at the option of Occidental commencing on the 10th anniversary of the issuance at a redemption price equal to 105% of the liquidation preference. In addition to that, over here you can see in the small print, Warren Buffett got 80 million shares of Occidental common stock. Those are warrants at an exercise price or a strike price of $62.50 per share, which is of course way outside of the money because after that, Occidental issued warrants with a strike price of $22 per share. What I'm sharing here with you in terms of this particular screen is that Berkshire Hathaway made this investment, which guarantees them effectively 8% per year. And if you think of annual returns, 8% is decent. It's not great, but it's certainly decent. And when you invest an amount like $10 billion, 8% is $800 million or $200 million a quarter. Not bad, you know. But if you're happy with 8%, you could have done this type of a deal if you had $10 billion in spare cash lying around. You can also see the redemption price of 105% of the 10.5 billion. So now you know exactly how much it would cost for Occidental to get out of this position in approximately 10 years from now. If we look at the period that I was just talking about, the Occidental preferreds are redeemable at Occidental's option beginning in 2029. So you have a 105% of the initial investment, that's 105% of $10 billion as an exit beginning in 2029. And Berkshire Hathaway got 80 million warrants with an exercise price in the early 60s. Now, as I go through this, you would probably think to yourself, well, that's probably not the greatest deal ever. But no one can time the market. And at the time of doing the deal, it probably looked okay. But now here's where it gets interesting. This article is on August the 16th. World Oil reported that Berkshire Hathaway had sold all its Oxy stake. Now, of course, it didn't sell the prefers, which is $10 billion as an investment. It sold the common stock. Where did it get the common stock from? Well, it had some common stock. Berkshire Hathaway owned some common stock of Occidental. And in addition to that, Occidental for a couple of quarters had been paying Berkshire Hathaway $200 million equivalent in common stock, diluting their shareholders, which is people like you and I, and at the same time giving Warren Buffett a fistful of common stocks, which he sold on August the 16th. And of course, we're a little bit late on the actual sale because the SEC reports are only filed at the end of the quarter. So by the time we pick up on it, it has already happened in the past. But let's look at some of these Occidental common stocks that he would have sold. We can see from his 13F that he filed, or Berkshire Hathaway filed, on February the 2nd, as February the 14th, 2020. Here you can see the total number of shares that were dished out to Berkshire Hathaway in lieu of common stock, or common stocks that were issued in order to make up the 8% coupon, which Occidental could not afford to pay in cash about a year ago from today. A quarter later, so again in 2020, on May the 15th, we can see a filing with similar amounts. If I go back there, you can see the amounts of the number of shares about the same. And what we had again was Occidental issuing Warren Buffett equivalent of $200 million in Occidental common stock to settle his $200 million coupon at the end of the quarter, which was the second quarter. From memory now, you might know that in the third quarter, Occidental could afford to pay Warren Buffett in cash, so they didn't issue any more stocks. The fact of the matter is, at this moment in time, after May 2020, Berkshire Hathaway had quite a few $1 million in common stocks, and they sold them. What did they sell them for? Well, we don't know exactly. All we do know is this is from earlier today, so it's not really applicable, but I was just looking at the graph. And I kind of picked the day, which is the day of the article I just shared with you a minute ago. This one over here, which was from August the 16th. So I don't have a trading date for August 16th, but I have a trading date for August 17th, which was almost $14. Now, if you look back at the period preceding that, you can probably deduce from looking at this graph that the average price might have been in the region of about $14 or $15, which means Warren Buffett exited his position at approximately $14 or $15. The reason why I'm sharing this with you is because if he had held on to those shares that were issued to him in lieu of his coupon, remember he had already basically received the 8% coupon on his $10 billion investment, but then he sold the common stock at around, let's say, $14 per share. If he had held them, today they'd be trading at just over $20. And there is a 30% uptick or so from the price he must have sold at to today. So if you're satisfied with an 8% coupon and that's all the growth you seek, then that's okay. If you had held on for a little longer, you would have made more money. How about Carl Icahn? So that was favorite uncle number 1, Warren Buffett, and this is favorite uncle number 2, Carl Icahn. Carl Icahn, this is according to Yahoo Finance on August the 10th, 2020, had picked up 11.07 million shares of Occidental, and he picked up the last shares that he purchased at an average price of about $15.25 each, which means based on today's price of about $20, that position is already up approximately a third, or 30 to 33% on that particular position. So I'm illustrating here for you the difference between staying long on Oxy, if you had the courage and the fortitude to do so, compared with selling out and just eating your losses. So at this time of the filing, this is a SEC 13D filing by Carl Icahn, and this is on October 1st, 2020. Carl Icahn and any of his equities that he files under, so the entities, that he files under, so IEP, which is Icahn Equity Partners, Enterprise Holdings, Icahn Capital, Icahn Onshore, etc., own in aggregate almost 108 million shares of Occidental. It would be very difficult to calculate his average cost basis on that 108 million share position, but I would guess that based on the last report I just showed you, it might be $20 or even less. But how about this trade? While Warren Buffett was selling out of his common stock because he decided he no longer likes Occidental Petroleum, you can see the dates over here behind my screen. It says September and a few different dates. The SEC report, this is an SEC 13D filing. No more than 7 filings with the SEC disclosed several buyings over the months of August and September for a total of more than 8 million Oxy warrants at an average price of $2.78. And there you can see the sort of average prices. There are more pages to this. I just took a snapshot to illustrate this to you, to show you what that trade kind of looks like at an average price of $3. And this is a screenshot I took at 3 p.m. today, Eastern time, and the warrants were trading at about $9. So Carl Icahn was buying warrants at about $3, while Warren Buffett was selling his common stock for about $15 or less. And Warren Buffett was basically making a loss compared to where it could have been today, with Occidental trading at over $20, while Carl Icahn was buying warrants for $3, which are now trading at about $9, which means Carl is up 200% on this particular position. And 8 million warrants at a price of $9 per warrant is quite a chunk of money in anyone's language, including English. So guys, that's a wrap. As I said at the beginning, I'm not here to be critical of anyone, but I've followed the teachings of Warren Buffett and people like Graham and Icahn and so on for many years. And every opportunity is a learning moment where you can say, this is a chance for me to learn about what to do and perhaps what not to do from time to time. Everyone makes mistakes. I'm not sure that if either of them could replay anything they had done, they might have done it differently. I'm not sure. Obviously, I don't know how they feel and how they think. It's just interesting for me to sort of draw a comparison between the way in which Warren Buffett has gone about trading his Occidental investment compared to Carl Icahn. As you know, I'm long in Occidental. I intend to stay long for quite a while and reap the benefits of being patient. So there's no quick hit GameStop for me as a win on this one, but I think Occidental will be fine in the end. You can let me know in the comments what you think. And of course, if you want to subscribe, please do so. And if you like my content, I would appreciate it if you subscribe, because it gives me some encouragement to keep doing what I do. On that happy note, this is Rudy saying thanks for watching. Goodbye for now. Take care. Stay safe.
what you came for. Oh, this is what you came for. I'm over. This is what you came for. I'm on. That's this weird. She said, I'm ready, so come and get me. I'm on.